Good evening, everybody, and welcome to our session for today. I hope you've all had a fantastic weekend and that your week has begun well. So today we'll be looking at how you can track price momentum using average directional movement index. So my name is Edwin and welcome. So average directional movement index is an indicator. So indicators are tools which are embedded in your trading platform, and they help you to track certain price reactions. So we shall get to see how you can use this indicator to trade, and how you can add it on your charts, and how best to find intraday positions. So the indicator was developed by a trader way back in 1978. It goes by the name J. Wells Wilder. So the original intention was to help this trader to find trading opportunities in commodities. So he was a commodities trader. With time, this indicator was adopted by traders to trade other financial assets. So the average directional momentum index, or ADX in short, is a technical analysis indicator which traders use to determine when price is likely to accelerate. So it basically helps traders to track where the strength of the prevailing trend is likely to peak pace. So the average directional index is non-directional. So though it has that connotation of direction, in and of itself does not help traders to identify where the direction of the price is headed. Rather, it helps traders to track where the price might start to accelerate, regardless of the direction. So average directional index is non-directional, therefore, and it only indicates when the price will start to pick pace, or where the price will start to move towards one direction with a significant momentum. So it is depicted by a single moving average line, and this line will oscillate between 0 to 100. So you basically have such a graphic. So this is the line that we are referring to as ADX. So what you'll notice is that if you check on the right side, you'll notice that you'll have some reading. So the reading starts from a low of 0 all the way to 100. So traders basically try to track where this indicator will start to rise higher and higher. So if you look at the shaded area, you'll be able to notice that as this indicator accelerates higher, more often than not, you'll find that it will correspond to a case where you'd find price action picking pace. So it can therefore help you to know when the momentum will increase. So in this case, as it continues to rise higher, there's a corresponding reaction on the price where you'd have price moving higher and higher. So as I have mentioned, it's non-directional. So this is another chart. So if you look at this chart, you'll also notice that as it rises higher and higher, in this case, there is a corresponding increase in price momentum to the downside. So both these charts are basically depicting cases where you'd be able to find price moving with a huge margin. But as to whether that movement is to the upside or to the downside, ADX cannot give you that. So it only gives you cases where price will accelerate on either side of the market. So as I have mentioned, it ranges from 0 to 100. So you'll notice that from 0 to around 20, or from around 20 up to around 25. So once you've marked that level, you'll be able to see. So like in this case, I've marked level 20. So as it rises above level 20, that is the point where the prevailing trend starts to rise, or that's where you're likely to have the price beginning to move towards that direction with a significant momentum. So anywhere between 0 to around 20, you'd have the current trend being considered to be quite weak. So from around 20 to level 50, you'd have the trend becoming stronger. And as it soars higher, from 50 to 75, the trend would be quite strong. The prevailing trend would be quite strong. Then 75 to 100, the trend would be said to be quite strong. So you'll notice that as it continues to soar higher, then that will signify that the current trend is quite strong. So when ADX is going up, the strength of the trend is increasing, and the price moves in the direction of the prevailing trend. So the point where ADX begins to decline, so like if it has been on the rise for quite some time, like in this case, the point where it begins to plateau and reverse, that is where that momentum will be regarded to have begun to diminish. So that's where it will start to slow down. So that does not mean that the trend is reversing. It basically means that that momentum is starting to slow down. And from that point onwards, as it continues to drop, so like in this case, when it continues to drop lower, then it means that price might start to consolidate. So this is an example of a case where you've had a strong momentum. So you will notice that from the point where ADX begins to rise, if you check the price action, there is a corresponding acceleration in price to the downside. Then when it plateaus and it begins to decline, that's the point where you'd have price consolidating. So how would you identify entry triggers using ADX? So before we get into identifying the right entries using ADX, it's good to mention that it has two other lines. So these two other lines are positive directional movement indicator, which is denoted by positive DMI. It also has negative directional movement indicator, which is denoted by negative DMI. So these two lines basically define the direction of the price movement. So based on the reactions that you'd have on these other two lines, you'd be able to know where the price is moving towards. So a bullish momentum prevails when positive DMI intersects above negative DMI at a case where you had ADX crossing above 20. A bearish momentum occurs when negative DMI intersects above positive DMI if ADX had crossed above 20, or if subsequent to that, you're going to have ADX crossing above 20. So what do I mean by this? So if you look at this chart, you'll be able to see that we have 3 lines. So the black line here is average directional index. The green line is positive directional movement indicator. Then the red line is negative directional movement indicator. So in this case, you'll notice that at this point, this is where we have our line, ADX, the black line, crossing above 20. So this is level 20. So once it crosses level 20, you'll basically check the other 2 lines. So you'll check the green line and the red line. So if the green line, so the green line in this case is positive DMI. So if positive DMI had intersected above negative DMI and have those 2 lines fanning out, that would denote that the direction is to the upside. So if you had the green line crossing above the red line, then when you look at ADX, you get an indication of an increasing momentum. So that basically means that the momentum at play is a bullish momentum. Conversely, if you look at this second setup on the right, you'll notice that this is the point where we get our first indication. So you'd have average directional momentum index rising above 20. Then when you check those other 2 lines, you'll notice that as that was happening, so it could be either at the same time or slightly before that, you check the action on the other 2 lines. So in this case, you'll notice that it's the red line. It is negative directional movement indicator, which had crossed above positive directional movement indicator. So the fact that negative DMI had crossed above positive DMI, that was indicating that the prevailing momentum, or the momentum which is increasing at that point in time, is a bearish momentum. So that's why you'll find that these 2 reactions would have price dropping quite rapidly. So this is an example of a positive momentum. So you'll notice that both ADX and positive DMI are soaring higher and higher. Then this is an indication of an increasing negative momentum. So you'd have ADX rising. At the same time, the fact that negative DMI is above positive DMI, that signifies that the prevailing momentum is a bearish momentum. So when it comes to getting the right setups to trade, I prefer to use this indicator in conjunction with parabolic. So they work pretty well. So I'll just share my MT4. So I'm just waiting for the MT4 to be projected. So I'll first start with how you can get to add these two indicators on the chart. So if you're using MT4 or MT5, you'll go to insert. Then the first option is indicators. So you'll be able to get average directional movement index there. So you click on it. So you will retain the default settings. Then you'll click OK. So you can enhance the visibility. So if the two lines are faded, you can right-click on that indicator and go to ADX properties. So the default setting has it that those two lines are dotted lines. So you can select a straight line. Then this is where you can adjust the thickness of those two lines to suit your preference. Then once you click OK, you'll be able to have that indicator bearing better settings. Then the other indicator that I trade this, I try to trade the momentum with is parabolic. So you'll go to insert indicators, then you can select parabolic, stop and reverse. I retain the default settings. So earlier today, if you have been tracking euro dollar, you'll notice that this indicator, in conjunction with parabolic stop and reverse, you could have been able to get an indication when the momentum was on the rise. So from 11 a.m., you'll notice that when ADX continued to rise above 20, there was a significant momentum. So up to now, price has been on the decrease, or price has been declining up to now by around 70 pips. So what I do, I check the bias of the market. So you'll be able to see that since last week on Thursday, this pair has been on a progressive downward move. Then the essence of adding parabolic, so parabolic is this indicator, is to help you know when you have a bullish run or a bearish run. So how it works is that when it's forming on the upper side of the candlesticks, that would generally signify that the momentum is bearish. So as you can see, from late Friday around 7 p.m., the pair was generally on a bearish run. So today, in the early hours of London, that's when ADX gave us a signal of an increasing momentum. So from that point onwards, when it rose above 20, then when you check the other two lines, negative DMI and positive DMI, you'll notice that these two lines were indicating an increasing negative momentum. So the red line is negative DMI and the green line is positive DMI. So the fact that the red line had intersected above the green line, so this was signifying direction in price to the downside. So it was signifying negative momentum. So as ADX continued to rise higher and higher, you'll notice that that momentum to the downside continued to persist. So this is a good example of a trade which you could have been able to take from the early hours of London session. Another example is pound against USD. So again here, we had another setup. So this is where it began, around 11. So when you look at parabolic, you'll notice that this is where that bearish move began. This is where that bearish run began. Then the fact that the momentum was on the increase and it was a negative momentum, you could have been able to capitalize on this downward move. So this is a very good run. So from around 11 o'clock, you'll notice that price has dropped by around 80 pips. So a range of 80 pips is good enough for you to get a good trade setup. Then the last pair that you could have been able to trade is the dollar against Swedish krona. So if you look at the general trajectory, we have a bullish. Since last week, the pair has been on a bullish run. Just trying to pick the trend line. So from 27th, you'll notice that price has been on the rise. So price has generally been on a bull run. So earlier today, we had momentum rising. So this is the point where the momentum began to rise. So you could have been able to get that indication if you had ADX on your chart. And this was a bullish momentum. So the fact that positive DMI had intersected above negative DMI at this point, that was an indication of a positive momentum or a bullish momentum. That coupled with the fact that you had parabolic giving you an early indication at this point. At around this point, you'll notice that that is where that momentum started to pick pace. So from around 11 o'clock today up to now, this pair has risen by around 900 pips. So again, this was a good setup to take. So the only caveat is to ensure that once you have spotted an opportunity, ensure that that opportunity aligns with the prevailing fundamentals. So if you have any events happening later on, you may opt to forgo that setup in order to ensure that you're not caught on the wrong side once that data has been released. So basically, that's how you can use average directional movement index to trade. So I can see we have quite a number of people. So Frey, you're asking whether there's any good broker suggestions. So I'd recommend you to use FXPesa Free if you're looking for a broker to open an account with. So you'll just go to www.fxpesa.com, and once you're on the website, you'll be in a position to find the tab where you can apply for a demo account or a live account. So that is the only feedback that I can see for now. So in case you're interested in physical sessions, we hold physical sessions every day from Monday to Friday, from 1 p.m. up to around 2:30, or 4 p.m. up to 5:30. So if you're interested to learn more, you can make a time to attend. So if you're new to trading, we highly recommend you to start on Monday so that you can progress through the week. Otherwise, that's all I had for today. So I hope you've been able to learn something and you'll be able to put it into use. And that's basically it. So that's pretty much it. I'm glad that you could be able to join us. So I hope to see you soon in our Wednesday session. And as I've mentioned, you can always get in touch with us through the website. So our contacts are on the website in case you need any assistance. So that's it for today, and I hope to see you soon. So I wish you all a very pleasant evening.